Well, good morning. I'm Jagender Rana. Topic for our discussion today is life insurance products. Life insurance products. The supremacy of gold as an investment option and its store value has suffered setback in past few years, and this precious yellow metal has lost its glitter and is no more branded as the most ideal investment. The investors have also discarded bullish phase of real estate that it enjoyed in 80s, 90s, and very recently also. Bank deposits are no longer the lifelines of middle class investments. So investment opportunities in stock market have either turned sour or dried up. Failure of flagship scheme under Section 64 has also badly shaken the public confidence of UTI. Mutual fund also went through a roller coaster ride even before shutting down. In such a changed economic scenario, the Indian market has witnessed the entry of five players in insurance sector with global experience and practices. So these companies and the press have done a lot to educate the Indian public about the concept and worth of the life insurance products. Reading the signals of the competition in the time, Life Insurance Corporation has also re-engineered itself to launch the product which can attract the saving options of Indian middle class saving that has not been left with many competing options. LIC has adopted new trends in concept and product design and have also positioned its product design and have positioned its product on the need of the segments with suitable promotion and distribution strategies and better product and distribution options to fulfill the wish list of the customers. All of these factors have contributed a record percentage growth in life insurance premium. Private players have also entered in the market. Not only entered, they are performing very well. So the market with suitable add-ons and traditional whole life, endowment type, money back and annual policies they are selling. New trends in the product design of life insurance products have been overviewed in this analysis. The various types of products offered by public sector giants and the new global players in private sector. All these products are like medicine. Each one is designed to meet certain needs depending upon the circumstances. So whole life policies. Now whole life plans are called as these policies cover up to the age of 100 years. In fact, a whole life plan is also known as an endowment plan, maturing at the age of 100. Should the insurer live to that age? There have been occurrences where maturity proceeds were paid to the insured that were living at the age of 100. So the whole life policy is believed to be the very elastic type of policy because of its long-term duration. Low premiums and higher sum assured under this policy. These policies run for as long as the policyholder is alive. So the policy monies and bonuses, if cover opted with the profit option, are payable only to the nominees or the beneficiaries upon the death of the policyholder. So the policyholder is not entitled to any money during his or her own lifetime. These policies were not sold in great number by the life insurers, and even the private insurers are not marketing this product in its traditional shape or even with little variations in grand way. Whole life covers do not provide any survival benefits and are based on pure risk, and the saving element is missing. in the products. So those who have better understanding of risk and saving factors may opt for securing their earning power risk by purchasing this basic cover of life, and the saving portion of the life cover payable in other endowment and money back covers may be better invested in other PM portfolios like public provident fund. It was expected that this perception will change and be corrected by the marketing and educating plans of the private players, but the initial thrust of the private players is not on this type of policies, though all of them have one or the other whole life plan in their product baskets. Then comes the endowment policies. Endowment policies are the most popular of all insurance plans. They cover the risk of a specified period at the end of which the sum insured is paid back to the policyholder along with the entire bonus accumulated during the term of the policy. The saving features of the endowment cover is the USP of these policies. So the insurance experts believe that where protection needs is dominant, endowment policy should not be recommended, but it has been observed that the major portfolio of the life insurance covers pertains to the endowment covers. The importance of endowment policies can be seen from the fact that the first set of life cover unwrapped by private players for endowment covers as compared to whole life policies. The premium rates are higher and the bonus rate is lower in the case of these covers. So these endowment amount may be put in any suitable investment regard geared to provide an income for the remainder of one's own life. Generally, this amount is used by the Indian middle class for meeting major events of life such as marriage or children high education expenditures. And then comes the other product called money back policies. Unlike regular endowment insurance plans where the survival benefits are payable only at the end of the endowment period, these schemes provide for intervallic payments of partial survival benefits during the term of the policy. Of course, so long as the policyholder is alive. A significant feature of this brand of policy is that on the happening of death of the policyholder at any time within the policy term, the death claim comprises full sum assured without deducting any of the survival benefit amounts that may have already been paid as money back components. So distinction of money back plan is one of the survival benefits to a certain extent that insurance defends to the family. So different terms, money back covers, Jeevan Chaya, Jeevan Survi and Jeevan Sanchay are some popular money back plans of the Life Insurance Corporation of India. In money back policies, the bonus rate is normally lower than the traditional endowment covers. Final additional bonus is either not payable or is paid at lower than the endowment rate on maturity. In case of death, it is not at all paid. Next one is annuity plans. Annuity plans are exactly opposite of a whole life insurance policy. As certain period increases, annuity decreases, the return on investment is quite high compared to the bank rates. The disadvantage is that there is no return of capital after death. Insurers have products with immediate annuity options as well as deferred annuity options. The premium for annuity plans can be paid either as single premium or in easy installments. The immediate annuity single premium is paid and the policy terminates with death. So in deferred annuity plan, the premium can be paid in single or in more installments. During deferment period, the survival benefit is nil. At vesting date, cash option is available if deferment period is 10 years or more in lieu of annuity. Annuity payment starts under the different options like for life only or for 5, 10, 15, 20 years certain, and thereafter for life. So in any case, annuity continues till death. And then comes the other life products like life insurers have other life products like investment plans and health plans. Bima Nivesh is LIC's popular and lucrative investment plan with tax benefits. Life cover for lump sum fund like gratuity or provident fund. Only single premium is accepted to grant such investment plans. With a 5 or 10-year term irrespective of the age, mutual benefit is sum assured with compounded guaranteed addition. But the most popular product is ULIP because ULIP is a plan which is investment cum insurance. So almost all the life insurance companies are selling the ULIP. Now the IRDA is very serious about the product and they have made certain amendments in the product so that the interest of the policyholders can be protected. Premium is required during the term of the policy, but it stops if stipulated disease tax. In case there is an affection of any of the major diseases within 1 year, this benefit is not payable and the policy shall be converted to an endowment plan with the profit and premium is reduced. These are certain other plans which were issued by the companies. The analysis of life insurance products of both the public sector and private sector players suggests that in time to come the customers will be having more choice. In terms of value additions, the private players are also putting maximum selling efforts on money back and endowment policies. The main attraction of the Indian market is its sheer size, and there is vast scope for LIC and new global players to explore the possibility to gain more and more share of it. And now the companies are selling the products as per the IRDA parameters, because IRDA is issuing the parameters for the insurance companies to standardize the products. So almost all companies are designing their products on the same lines, and there are a variety of products. At times it is difficult to choose even the appropriate product for the self and for the family. But the number of products are available in the market and this is in the interest of the policyholder. Thank you very much.